In today's economy, more people than ever are looking to buy and sell businesses. But how do you do it? Welcome to the Deal Board, presented by Transworld Business Advisors. Straight talk about real deals and real people. Listen to stories, interviews, and expert advice to help your business sale, merger, or acquisition process. Now, here are your business exit experts, Andy and Jessica.
Okay, so today we're going to talk about financing business acquisitions, but specifically financing a business acquisition through the SBA program or the Small Business Administration program, which is a government program that guarantees small business loans originated by approved lenders. And specifically today, we're going to talk about two loan programs the SBA has, the 7A loan and the 504 loan. Andy, you want to give a quick overview about the 7A loan?
The 7A program is a government guarantee program, and it's a great opportunity for the small business community to buy and sell businesses. It's a guarantee program for the banks that historically wouldn't have lent to these businesses because they don't have enough collateral coverage. Basically, they don't have enough assets to cover the loan. So this program guarantees approximately 80% of the loan for the banks that lend within the SBA criteria. And that's the magic. And we're going to talk about some of that criteria for businesses being sold and the criteria for the buyers who want to buy. But simply, the 7A program can loan up to $5 million for a business over 10 years. And the buyers can put a small percentage down when they're taking the loan. But, of course, they have to be creditworthy. And both buyer and seller need to qualify based on the criteria of the SBA and some banks. And listen, in the history of this program, it's run out of money, it's been defunded, it's been suspended. But in the last several years, it's been fantastic. And there's really no sign of the government slowing this program down. It really does pay for itself. And in turn, since, the guarantee has been strong and the secondary market's been strong, the banks are lending. We'll talk about that a little bit more. And while, the 7A program is the most popular at Transworld, we do some 504 loans, which we'll talk about. And the only difference is that they do include real estate. And the 504 loans could be actually more money, which I think you'll talk about in a second. But both loans are a great deal for the buyer and sellers. In fact, over 20% of the businesses sold in recent years here at Transworld have been financed through these SBA types of loans.
Yeah, I mean, we've done a lot of deals, with SBA loans, and especially more recently because there is a lot of lenders out there looking to do business acquisition loans through this program. And, one of the lenders we work with always says that bankers are collateral-based lenders. And with that 80% guarantee for the government, and then if the buyer's injecting, at little 10%, maybe up to 20 or 25% for their down payment, there's very little risk, I would say, or less risk for the banker or the lender with these loans.
Yes, there's so little risk that these loans are highly sought after on the secondary market. And while some banks do hold the loans and service them, most of them are selling them immediately as soon as they make the loan, which right now, again, is very profitable for the banks. Therefore, lending through the SBA program is really hot, which is great for buyers and sellers out there. Again, 7A loans could be as large as $5 million. There's no set minimums, but, most of the banks are going to want to see at least $150,000 because the fees and, for them to go through all that paperwork. So most of them is $150,000, but $5 million handles some really sizable businesses. And it used to be $2 million several years ago. So it's been great. And buyers usually have to put down at least 10%. And the loans have about a 10-year term, which is twice most sellers would offer if they were financing the loan. And, by the way, the loan does cost money. The SBA assesses a guarantee fee that is charged to the lender, which of course is passed on to the borrowers for the most part. So for about every $1 million of loan, there's about a $35,000 to $40,000 loan fee, which sounds expensive, but the good news is they'll roll that into the loan for you. So plan for about, 3.5% and up for a fee for some of the banks. And also, the good news is that they do a little bit more in the loans for the buyers to have working capital, which is great for the deal as well. It's great for the buyers, great for the sellers, so the buyers don't run out of money immediately when they're operating these businesses. Interest rates are negotiated between the bank and the borrower, and they can't exceed the SBA maximum, which is about 2.75 above prime. And with the prime floating around 5% these days, although loans are going up, the prime might be going up soon. The loan rates are floating about 7 to 8%, but we are seeing them up, but it's still good money. And most of the interest rates are variable, but you can find some banks that do have a fixed rate. So it'll probably be a little bit higher. Really, the 7(a) program is a great program for sellers and buyers to leverage into a business sale. Hey, and there are some other programs as well.
Yeah. Yeah. And I mean, one of those other programs that you could use is the SBA 504 loan, which we don't do very often, but those repayment terms can be 10 or 20 years, but you do have to have, owner occupied real estate rolled into that loan. So we don't see that as much because I think more and more business owners lease their property rather than own, but that's always a great program to use as well, that if you have commercial real estate that you're going to occupy, I think those loan amounts go up to $14 million. And again, with that 10 to 20 year repayment, that amortization schedule is much more preferable to the business owner.
As a seller, you really want a buyer to use this program. Obviously, it's nice that the buyers are borrowing the money from someone else instead of you, the seller. And they have a long-term loan that gives them good cash flow and a better chance to succeed. And instead of, say, a typical seller note, which is about 50% cash at closing, the sellers in the 7(a) program usually get about 90% of their cash at closing. And the banks like to see the seller stay in the deal by holding 10% note that will be in second position to the bank, correct?
Yeah. Yeah. About 10% is, I think, what's typical. Sometimes up to 15%, but still, I mean, to get the bulk of your money in closing in the form of cash, plus it opens the door for a lot more buyers to take a look at your business when it's, pre-qualified by a lender through one of these SBA programs.
Right. And the buyers love this. They love to leverage their money. For example, if a buyer had $200,000 cash, they could do, a few different things. They could buy one business with $200,000 cash. So they're buying a $200,000 business that says, if we go back to our valuation podcast 2 times, that's making about $200,000. They could also buy a business that the seller is willing to give some seller financing, which usually runs about 50%. So you're looking about at a $400,000 business with $200,000 down, with the rest over time. And that business will make, say $200,000 using the 2-time formula. But if they're able to leverage into a 7(a) loan with, say, 10% down, that same $200,000 could buy them a $2 million business.
Which means more money in their pocket too, because those larger businesses are providing a higher amount of cash flow and sellers' discretionary earnings, which we talked about on the valuation podcast. So sometimes the return on investment is much more favorable.
Right. And buyers do have to qualify by having a good credit score. I think it's about 680. And they have to have relevant industry experience. Now, they could maybe get in with some general industry experience, something similar, or basic general management experience. But, the banks are getting a little bit stickier about this. They want to see the buyers be able to succeed. And on the seller side, of course, they have to qualify. And Jessica, what is the one thing that businesses need to qualify?
Great books and records.
Yes, and we'll cover that in another podcast. They need good books and records and a solid front page of the tax return. So, the banks don't like to go digging for the money. They want to see a solid net profit right on the front page. They want to see the salaries for the owners. Of course, if they're servicing debt service, they'll add back things like depreciation and interest. But all those things, they're going to want to see a solid business right up front on the tax returns. And when they have good books and records, they're going to get a better price.
So all that being said, I think we've got some great experts on the show today to talk about what the loan process looks like for small business acquisitions with their specific banks and just in general. So hopefully you'll learn a lot from our lender experts that are on today, and we've got a good show planned.
Yeah, it's going to be great. Let's get it started.
Transworld Business Advisors is the world's largest business brokerage and mergers and acquisitions firm with over 500 brokers in nearly 200 offices worldwide. Transworld's team handles thousands of business sales every year. To be connected with a qualified business broker or learn more about the buying and selling process, visit tworld.com/the deal board or call 888-719-9098.
So welcome back, and I'm very happy to introduce one of the best partners Transworld has is Stearns Bank. And Stearns has been with Transworld for many years, and we're doing a lot of SBA loans, and that's our topic today, talking about the SBA program and some great lenders that are involved in it. And today we have three people from Stearns Bank, and the first one I'll introduce is Tom Ethen. Tom, welcome.
Thanks, Andy. I appreciate the opportunity to speak with you today. Also with me is two of our most experienced lenders, Jack Postregna and Doris Davila. And they're going to talk a little bit more about the program. But in general, I just wanted to say I certainly appreciate the partnership with your great company, and we're happy to provide small business loans to the buyers of your businesses. So primarily that's done through the small business program. People call it the SBA program, and it's really a great program for business acquisitions. Currently, it's very well supported and very well funded. So there's lots of money available. There's no sign of any shortage of funding. So it's a great program. It allows you to finance all the different components of a business acquisition, all the way from real estate to equipment to inventory. Goodwill is certainly a possibility, which is involved in all business acquisition transactions. So very flexible. And I'll let Jack and Doris go into a little bit more detail on some of the other features of the financing program.
That's great. I mean, you're absolutely right. I mean, we've seen over the years, in past years, where the government actually stopped funding it, and it kind of ran out of money, and we have no signs of that going on right now. And the other thing that you brought up was perfect, and it'll lead right into what I hope Jack's going to talk about of doing deals. Is there's really no other way to finance Goodwill and deals. And the SBA program that's what it's famous for. So, and that's part of the 7A program and the 504 program. But I want to introduce Jack. We've known Jack for many years, and he's doing a lot of good deals here at Transworld. So, Jack, why don't you jump in?
Good morning, everybody. Thank you. Yeah, in terms of Goodwill deals, we'll certainly do those. I want to mention one thing here is that there's really three ways you can buy a business. There's cash, there's straight seller financing, and then there's the SBA. And we promote the SBA. It's the great thing, the finance tool. And I'm going to hand it over to you.
Yeah, so I wanted to also talk a little bit about Stearns Bank also and who we are. We are a privately held institution, been around since 1912 with the same owner since 1964. Our niche is SBA financing. We're an SBA preferred lender, and we specialize in acquisition loans. The difference between Stearns and what we offer is that we deliver very fast. I mean, we know that there's a transaction. We know there's buyers, sellers, all resources, moving parts going on with a transaction. So our goal is to make sure that we get a decision immediately so everyone can move on into their transaction. And we enjoy it. We enjoy helping these acquisitions. Thank you.
So, Jack, these deals get muddy. I mean, that's the best way to describe it. It's a process to get a loan done for a business. And, businesses aren't like property. You can't exactly get the exact value through an appraisal. It's certainly subjective, and there's a lot of moving parts.
Andy, we like to set the expectation for the buyer and the broker on how the transaction is going to go, what we actually need for the transaction. We also we provide next steps. We also do a kickoff call, and that's where we kind of bring in the borrower, the broker in some cases, and us, the lender, and we'll go through the checklist items, and we'll let them know why they're needed, and again set expectations for closing.
Great. How long does it take approximately to get from maybe the first time you're talking to a buyer and a seller when they have a deal to getting the deal done?
Sure. I like to say 7-day approval, 30-day close. We like to get a formal commitment for that buyer, typically in 7 days or less. And then we like to close. If it's business only, we'll close in typically 30 days or less. If there's commercial real estate, 35 to 45 days.
And Doris, I mean, anything that you can add? I know you're seeing a lot of deals go, across your desk, and you're working on a lot of them. And, there's always unexpected things that come up. But how do you deal with that?
Yeah, thanks, Andy. I think the advice that I give is that we give is be well prepared. If a buyer's coming in to buy a transaction, understand the transaction, understand their financials. The seller, the same. Be very well prepared with their financials. Provide quality financials. Know what the lender is asking, and get the lender involved immediately, because that way we can move the transaction along. I think to be better prepared in a transaction is very well, to get the transaction done successfully.
Yeah, it's really important to be prepared. I think the communication piece is a huge piece, to talk with the broker and make sure you know and understand the business very well before we're lending money on it.
Also, I wanted to add that the lenders, we contact the brokers, sellers brokers, the buyers brokers. We get involved with the outside resources. We contact the insurance company, to the landlord, to talk about leases. So we're involved in every step of the way. And our portal, our bank portal that the brokers have access to, and the buyers as well, is very efficient. That allows the customer to come in and the brokers to download the items that we need. And that's why we're more successful in closing deals.
Yeah, I think the bottom line here is that, every bank thinks they loan money through the SBA program, and it's really a specialty. And you want to go to a bank that knows the process, that have the right people in place, that are in touch with their underwriters, that know the checklist very well, that are preferred lenders like Stearns. And so we've been very successful, and we want to keep promoting Stearns Bank, not only here in Florida, where we're recording today, but and where their headquarters is actually up in Minnesota as well, right? So that's but they're all throughout all 50 states. So they're a 50-state lender, and they do great deals, and they want to. And like you said, we got to meet the family. It's a family-owned bank, and they're great to work with, and that's what you need is great reps and great bankers to work with. So thanks for coming on today.
And Andy, this might be a good time just to remind people some of the general benefits of the small business program. The program, generally speaking, provides for lower equity injections, longer terms, and lower payments for these business acquisitions, in addition to financing things like Goodwill. Other benefits include the fact that they're very effectively priced, they're very reasonably priced loans, and they don't have any balloon payments, so they're fully amortizing, which is usually good for a newer business that maybe just acquired a business. To have a loan, there's no maturity dates, there's no balloon payments along the way. So these are long-term, permanent loans with extended financing that are very flexible and don't have any covenants either. So you don't usually run into any issues with the bank measuring covenants on an annual basis or anything like that. So a very user-friendly, borrower-friendly type of financing that can be a permanent loan to buy a business.
That's perfect, Tom. Thanks, everybody. Thanks for coming in today.
Hey, Andy, you know what time I think it is? I think it's time to talk about our deal of the week.
Deal of the week. Hey, we're back with the deal of the week, and we're here with Aaron Bean talking about a recent sale of a furniture store. And it sounds like a great deal. And again, we always talk about good deals for good people. So why don't you give us a little bit of background about this furniture store and who bought it and how much?
So it was a furniture store in down here in South Florida that specialized in basically selling used furniture, mostly from antiques and very eclectic type of pieces that were in high-end homes, a lot of Palm Beach Island homes, and great business. In business for 14 years. The seller was retiring; her kids had gone to college, and she really loved the business, but she wanted to basically sell. And so we found a really great buyer with excellent retail background. who came in and actually partnered with the seller, who continued to buy for the store over a period of time that was agreed upon. And it was SBA financed, excellent books and records. And the deal sold for $450,000. It included $100,000 worth of inventory. And the business made historically about $200,000 a year, and was very scalable, obviously, based on the inventory that they were selling. So it was an excellent business. The buyers have since come in and revamped the website, and they're super happy about it. And they're going forward into this great season down here as we go into the next couple months.
Sounds like a great deal. About 2 times with, and I think about 20% down for the buyer. So about $70,000 or a little bit less, 15 to 20% for the buyers. A seller held a note to, and the SBA was very happy with that. So it sounds like a win-win-win, good deal for good peoples. Thanks, Erin. Thanks for joining us.
You're welcome.
Welcome back, everybody. And we have with us now John Wahl from Live Oak Bank, and he's one of the banking partners that Transworld works with closely. And today, since we're talking about financing a business and specifically financing through the SBA process, we wanted to have John on to talk about larger deal sizes and how to finance those through an SBA-backed loan. So, John, why don't you introduce yourself to the listeners and tell them a little bit about what you do at Live Oak?
Thanks a lot, Jessica. I appreciate the opportunity to be part of this podcast with Transworld. I'm part of Live Oak Bank's merger and acquisition group. Live Oak Bank is one of the top SBA lenders in the country and was founded in 2008 with the specialty of just providing SBA financing for America's entrepreneurs. Live Oak Bank, out of our portfolio, 90% of all of our deals are SBA loan. We're not a traditional bank in the sense of tellers, bank counters, multiple locations all over, and just focus on SBA. I've been in the SBA lending career now for over 13 years and have had the opportunity to help hundreds of small business owners go through the process of SBA financing.
Great. Thanks so much. And John, you guys do all kinds of deal sizes, but you're also known for doing some larger deal sizes. So tell the listeners a little bit, when we talk about a larger loan size or a larger SBA deal size, what does that mean?
You're correct. SBA doesn't differentiate one way or another from loan size. However, it's up to each bank to determine where their comfort level is. Live Oak does provide financing in both the Main Street market, which are typically loan sizes under $2 million, and the M&A market, which are loan sizes above $2 million, is typically what I would refer to as a larger SBA transaction.
So, and what size do they go up to? $2 million to what's the cap?
So the cap through the SBA program is $5 million. And one unique thing about Live Oak Bank is, in addition to the $5 million that's guaranteed from the SBA, we will provide a combination loan of another $2.5 million on generally just a little bit shorter amortization and shorter term than the SBA loan, which would allow a borrower to have financing up to $7.5 million.
Okay, that's great. So like when we're talking about, $2 million and above for transactions, what differs in the loan process, or is there anything that's more important that might be on, say, a $250,000 loan?
I think the real key element that we look for as these deals get bigger, and it's really important for all of the listeners to recognize that when we do these loans, there's an enormous amount of blue sky that we are financing. There's not any restrictions or requirements from the SBA as far as collateral coverage like you would have with a conventional loan. So as these deals get larger, there is more and more emphasis on how clean the financials are. If that's, a CPA reviewed statements, if they're, it'll be important for the borrowers and the sellers to be able to have their due diligence. And one of those due diligence items is having really clean financials. So I would suggest to sellers that you might be working with that they bring in their CPA earlier on in the process and clean those books up as much as possible. Make sure that the expenses that are being ran through there are truly business expenses. I think that's a real key element as the deals get larger. We look to make sure that they're a lot cleaner from a financial standpoint and able to service the debt at a little bit higher level than you may look for on smaller transactions.
So we talked to our listeners. We actually had a podcast about recasting and educated them on add backs and non-discretionary expenses and how we calculate that seller's discretionary earnings. Talk a little bit about, because I know the banks look at those add backs a little bit differently than a business broker or a seller or buyer would. What add backs would you have caution buyers of being wary of when it comes to the debt financing piece?
Yeah, the ones that I would say are the gray area or red flags are expenses, the travel expense or the expense of the new deck on their house in the mountains, their RV home, excess expenditures related to these items are really tough to add back as a bank. Generally, the bank would prefer to see an EBITDA type of basis, officer comp, wages and salaries of individuals that may not have been actually employed in the company and would not be going forward. We can also get comfortable with true one-time expenses if there might have been something related to legal or a specialized project that they had to do that does not occur on an annual basis. Those are all ones that banks will typically get comfortable with. What I always tell people is that, again, this is a government guaranteed program. So they want to be cautious on what they're trying to include as a discretionary item. But the point that I would hit is that if you can document it and verify it, then it's something that we would consider the argument can be made that it is not a go forward type of expense or something that a new buyer would have. Now, there are a lot of discretionary expenses that the new owner is going to have, which are more of a benefit to that buyer than they are to the bank, because it's likely that buyer will have those same expenses.
Okay, great. So again, documentation is key on those additional expenses. So on the buyer side, is there anything that you guys look for on the buyer qualification for these larger loan sizes that you wouldn't necessarily look for on a smaller loan size? Any personal collateral or anything like that?
Not from a personal collateral standpoint. Again, collateral is not key to the transaction. What we will be looking for, though, is really good transferable experience, a good business plan, a good transition plan to understand how they will work with the seller to transition the company through the 12-month allowed period from the SBA. It's always a benefit to a bank if the borrower is going to have post-injection liquidity. One thing we will see on these larger transactions is that they will put together a group of buyers and investors that go into them. And so the individuals that are going to be guarantors, we like to see that they have a good educational background, work experience, and will have the fortitude and we like to call it the eye of the tiger to be able to win with the new business and therefore be able to repay the debt.
Makes sense. I like Eye of the Tiger too. That's great. So last question for you, and you're probably getting this a lot right now, but with the changes with interest rates, how do you see that affecting the business acquisition loans now and in the future?
I would say with regards to interest rates, when you look at where rates are still today over the last 15 and 25 years, money is still really cheap. I always like to tell people that when you look at what it is that the bank is financing, it's not like we're financing your home or a car or something tangible that we can take back into the secondary market and resell. What we're financing is blue sky, future cash flow, and something that doesn't have a true tangible value. So it's like a giant unsecured loan. If it was a credit card debt, you'd be paying, 19, 20%. That's definitely not where I see rates going. And that's not where they're at right now. They have crept up over the last 2 years, which means that the economy is doing well and that fiscal policy is working. So for most of, I think, your sellers and most buyers out there, they recognize that where the economy is at today is strong and the businesses are profitable. So I think that, there may be some continued interest rate increases, but I still think cost of capital is cheap when you compare it to diluting it with other owners or having to, take loans from outside sources and things like that. So money is still cheap, and I think it's still a great time to acquire a new business.
Great. Well, that's all great news. To sum it all up, for these larger transactions, good books and records, make sure all the expenses are documented. And then on the buyer side, really that transferable experience is going to be key. So, John, we thank you so much for your time today. For the listeners, we'll put John's information in our show notes if you want to reach out more and learn more about Live Oak. But thank you again, John.
Thank you, Jessica. And I appreciate the opportunity to partner with Transworld.
Hey, Jessica, you know what time it is?
Money time?
Almost. It's time for listing of the week.
So for our listing this week, we have Patrick Bombardier from our Denver office. Patrick, tell us a little bit about yourself and your listing of the week.
Hi, I'm Patrick Bombardier. I'm a broker here in the Denver metro area. And I do have, for Transworld, obviously, Transworld Rocky Mountain, I do have a listing of the week to talk about. It's a custom stone countertop fabricator and installer. This is a really good business with a very good owner. They have a good track record here in the Denver area. They are a custom fabricator and installer of countertops and flooring. They do it pretty much wholesale, but they do have a retail aspect to them as well. They are the exclusive installer for one of the largest big box retailers in the nation. And they work directly with contractors, developers, designers, and as I mentioned, the big box retailers. And they do also have a showroom and fabrication facility, both in the same location in the Denver area. It's about a 30,000 square foot facility in central Denver.
Great. So tell us a little bit about the numbers, listing price, revenue, SDE, all that good stuff.
So the revenue is about a little over $8 million a year. So they are doing quite a lot of activity. They do have a SDE of a little over $630,000. Their listing price is at $1.8 million. And they do have a really good management team in place as well. But they do have a tremendous amount of activity going on right now that somebody could kind of plug and play with the existing management that would be expected to stay.
All right, great. So if listeners want to find out more information or inquire about this business for sale, how can they contact you or get information about the business?
Yeah, a great way to reach me would be to email me. My email is patrickb, as in boy, at tworlddenver.com, patrickb@tworlddenver.com. The listing number, if you'd like to go to our website, Transworld website, is 0873-283-800, 0873-283-800, or just give me a call. My number is 720-259-5099. My extension is 126, 720-259-5099, extension 126.
Great. And for all these listeners out there, we'll put that in the show notes too. And happy hunting.
Thanks for tuning in to our show today. If you like the podcast, don't forget to subscribe through your favorite podcasting app and leave us a review. If you have questions or suggestions for the show, visit us at tworld/thedealboard or email us at thedealboard@tworld.com.